MACD is one of the top 5 most used indicators among profitable traders worldwide. In fact, it's even more used than RSI in many systems. So, if you've ever opened MACD, stared at those lines and bars, and thought, wait, what does this actually mean? You're in the right video. Today I'll show you how MACD really works, not just how to use it, but what it actually tells you about price. Let's get into it. Alright, so what even is MACD? Before we talk about how to use it, let's be clear on what it actually shows. The MACD indicator is made up of 3 simple parts. The MACD line. This is the difference between a fast and a slow-moving average. So when it goes up, that means the average price is accelerating upward. When it goes down, momentum is slowing or price is pushing down faster. Then, signal line. This is just a moving average of the MACD line itself. It smooths out the short-term fluctuations and shows the average direction of momentum. And finally, the histogram. This shows the distance between the MACD line and the signal line. The taller the bars, the stronger the momentum difference. If the bars shrink, momentum is fading. This indicator shows you trend strength, acceleration, and changes in momentum all in one view. Now let's break down how to use that info for better entries. Tip 1. Use line crosses for momentum shift. When the MACD line crosses above the signal line, that tells you price is accelerating upward faster than before, so the probability of upward movement increases. And when MACD crosses below the signal line, it means bearish momentum is picking up. But remember, don't trade just on the cross. Look for it in context. Tip 2. Watch the histogram for strength confirmation. After a crossover, if the histogram bars start growing, that tells you the impulse is gaining strength. This is especially helpful when trading breakouts because you want to know if the breakout is backed by momentum or not. But if histogram bars shrink or move towards 0, momentum is weakening. The move may fade or reverse. I want to start trading, but I'm scared I'll lose money because I'm a total beginner and don't know what I'm doing. I hear this every day. So just reminding you, you can copy my trades for free right now. Just hop on a demo, test it, and see for yourself if it works or not. I trade on Pocket Option, and since I have a partnership with them, you can copy my trades for free as long as you're on Pocket. Instead of paying $150, I'll get a commission from the platform. And no, this won't make you rich overnight, but it gets you started. You'll see how it works, make your first profit, and then decide if you want to go deeper. I see new success stories in my DMs every day, so don't tell me it can't be done. Today it's easier than ever, and you've got the perfect chance to take that first step. The chart shows a clear uptrend. Price is moving steadily along the trend line. Everything looks stable until it hits a resistance level. I draw a line there and immediately recognize a familiar pattern, a triangle. This pattern means the price is squeezing, the movement gets tighter, candles are getting smaller, and usually after that we get a breakout. In our case, the price has already broken through the resistance level upwards. But before jumping into a trade, I want to make sure this move is real and likely to continue because there are still a few levels above. That's where MACD comes in. I check the indicator. The MACD line is above the signal line, the histogram is growing, the bars are getting taller, and the gap between the lines is widening. All of this tells me the uptrend is gaining momentum. Now let's compare it to how MACD behaved earlier, like during the first bounce off the level. Back then the lines were almost touching, the histogram was weak, and eventually the lines crossed. That was the signal the trend was dying down. But now, totally different picture. The move is strong and all signals confirm that. I open a 15-minute trade upwards because there are no resistance levels above and price has plenty of room to move without a sharp pullback. Volatility overall is high, and usually I avoid those setups, but inside the triangle, the price was moving calmly, and the breakout happened with a sharp increase in volatility. And the result? The trade closed in profit. Now let's take a look at another setup, where MACD actually worked really well. Here we've got a global sideways trend. The price is mostly moving flat without a clear direction. But locally, we can see an upward movement. Price climbs up to a resistance level, can't break it, and starts pulling back. I draw the levels and notice a classic head and shoulders pattern forming. That's a well-known reversal pattern. It tells us the upward move is losing steam and there's a good chance the trend is about to flip downward. I wait for the price to break the neckline, the level between the shoulders. The indicator gives us a great confirmation. The lines have already crossed, the histogram is moving down, and the distance between the lines is growing. I pull it all together. Sideways market, reversal pattern, confirmation from the indicator. And now the price is confidently breaking through the support level. Everything checks out. The setup makes sense and there are enough confirmations. I open a 12-minute trade downward because there's a bigger support level below and I expect the price to reach it within that time. If this helped, leave a like and let me know in the comments if MACD ever saved or burned your trades. And if you want to copy my trades in real time, learn real setups, and get deeper breakdowns like this, join the Telegram. Links in the description. I'll see you there.